Hello, everybody. Um, wanted to come in and make a quick uh, video explaining part of my trading. 'Cause as I was streaming live this morning, I used one of my ICT concepts, um, and just in case those that were in the stream were interested to understand it, I wanted to explain it because I did not have time to explain it in the live Discord stream this morning. uh, because I was trading. So um, it's called dealing range theory, and it's a pretty simple concept, ICT concept. So I wanted to come in and just work with that a little bit and explain what it is and how I use it in my own trading. Okay. Um, so we're going to use the MYM chart here. Um, Let me just get everything off the charts. Uh, okay, so we have just a clean chart to work with here. So DRT levels, or the dealing range theory levels, is something that I use a lot. Um, I learned them from another trader. He is online on YouTube, but instead of me just giving you his name, um, anyone who's interested in using the concept, I would suggest that you go out and you search out uh, people who use dealing range theory and get perspectives from multiple people, and find the people that explain it the best to you. Because if I give you the person I learned from, you might not learn as much from his way of teaching as you would someone else's. So I always advocate for you to do your own research, learn from the people that you learn from the best, because we all learn differently. So I don't want to uh, steer you in one direction or the other. Um, Anyone in the Discord, Uh, you are welcome to ask me privately in a DM um, if you want the specific person I learned from, which is fine, but I'm just not going to put it out there for everybody. And I'm a little torn on that just because, he is a very good teacher. Um, he's very knowledgeable in dealing range theory, and he's a very successful trader with it. And I would love to give him his flowers for teaching me as well. But I also know that he's prominent enough to where if you search dealing range theory, his name is probably going to be one of the first ones that would come up, um, and that you will be able to find him very easily. So let's just get right to it. What is dealing range theory? It is an ICT concept that puts a grid on a manipulation move that changes structure. Okay, that is basically the definition I have for it. I'm sure other dealing range or DRT traders um, would explain it pretty much the same way. To me, that's the simplest definition for it. It is a manipulation move that changes structure, and then we put levels on that move. Okay, so basically what we're looking for is the um, liquidity sweep of a swing high or low. Now, I use the 4-hour chart. This can be used on any time frame. In fact, you can have a dealing range theory within a dealing range, or a dealing range within a dealing range. So, if you wanted to use the daily or weekly, and put a dealing range on that. You could then use the 4 hour for a dealing range inside of that dealing range to see if your levels match up anywhere to find even higher probability trades. I don't see the need for that. I think the 4 hour is enough. It does very well for the way that I trade it. So, um, I just use one major dealing range. Okay. Um, to find levels. Sorry, somebody was driving by. I just wanted to see who it was. So basically, we're looking for the sweep of a high or low that then runs to take out a swing high or low to the opposite side. Okay. And on YM, we had this 4 hour candle on September 22nd, um, 2 days ago, that swept this swing low right here. Okay. Um, Let me just make sure, folks, that I'm on the right. Yeah, there we go. Okay. Um, so we swept the swing low, and then we immediately went up and took out this swing high um, here. Okay, from September 19th. Okay, so that is the manipulation move. Sweep, liquidity sweep a swing low to then go up and break structure to the high side by taking out a swing high. And then we continued to move up. Um, Let me get that off the chart real quick. All right. So what do we do with this? Well, when we see this happen, obviously, the very first time our dealing range, and we use a Fibonacci retracement tool, and I have it set to quad, or it's labeled quad quad. And I'll show you the difference between quad quad and quads. Um, so we're just going to take that and mark it from the bottom and move it to the most recent high. Now, let's just not even look at this move that happened today. And we would say that, okay, well, on the 22nd, um, okay, as soon as it happened, we would put it on this candle here. Well, the next candle went higher. Okay, no problem. Um, but you can also see that the pullback came from the initial set of the dealing range. The pullback came to 25%, and then we broke out of that. Okay. But every candle that moves higher than this, we're just going to move our dealing range. Very next candle came down to the 25% and went back up. And the next candle pulled back a little, but ended back up. We never broke through the 25% level, right? And every candle again that goes higher than the dealing range. So this candle at 2 o'clock in the morning on the 23rd went above that dealing range. And we're just going to keep moving higher and higher until we get a major pullback, um, more than the 25%. Um, and then we can start looking at some other things. So here we are on the 23rd at 10 o'clock in the morning. Um, and that was yesterday's high. Okay. And then we had the big 4 hour candle that came all the way down and broke the low of this candle here. Okay. Not only that, this is basically a bearish uh, 180 or a bearish engulfing candle. Um, and that is a good pullback. Okay. So now we have um, a very good dealing range to deal with here on the 4 hour chart. And obviously we never went and took out that high. But each time I move this candle, because I don't trade a 4 hour chart, I'm just using this 4 hour chart as a reference, right? Um, what I do is once I have my dealing range set, and as long as we don't break back above the 0 DRT level, um, I'm looking at this on a 15-minute chart, okay? Um, So what I want to look for here, once we started this pullback, is I'm looking for fair value gaps at specific levels. Okay. Um, and you can see at the 25 DRT level on the 15-minute chart, we have ourselves a fair value gap. So I would mark out that fair value gap because this is going to be important later when price comes back up to that area, right? And we're going to lock that into place. Okay. Um, we also have a couple more fair value gaps here. This fair value gap here has not quite been rebalanced, but we came pretty close to it today at the open. Okay, so we pushed right up into this fair value gap and then dumped back off. Now we can take a look at that, and of course, you know, we had this consolidation on the 23rd that pushed into this fair value gap and fell off. So this seems to be the fair value gap that wants to hold, at least for the time being. So we could go ahead and put a 15-minute fair value gap on that and have that on when we get to this morning's trading, right? Um, so let me go ahead and put our session breaks back on the charts for a moment, okay? And you can see where we opened up today at, okay, at the Asian Open. Um, so price went up. We actually fell below the 50% level of the DRT range. Now, the 50% equilibrium level is where a lot of consolidation can happen and will happen, okay, because that is balanced price for the range that we are looking at. Um, and you can see we had a fair value gap uh, at this point at the 50% level, okay, and we ended up inverting that gap, okay. Then we came back through and closed to the downside. Then, in the New York pre-market, we came back up and we closed up to the upside. So this fair value gap really doesn't hold any importance for me. Um, it did cause a reaction uh, yesterday afternoon, um, but then we broke through, and then broke through again before the New York Open started. So this fair value gap doesn't mean much to me. So this morning when I came to my computer and I looked at this, I would just take that fair value gap off the chart. What I'm looking for now is can we get a push back up into this fair value gap that did hold earlier, and what would happen with that? If we were to close through that, or price would run through that, I would be looking at the next fair value gap up. And what I'm looking for is for a touch of the midline or even a push through the midline that a 15-minute candle does not close above the midline. Okay. So at 9:30 this morning, that's exactly what we got. We pushed right up to the middle of that fair value gap and the 15-minute candle rejected, okay, and closed just a little above half of its entire value. This shows weakness to me. The next candle confirms that weakness with a bear 180 or a bearish engulfing candle, right? We closed below the body of this 15-minute candle that touched into the midline of that fair value gap. Now, all the time I'm looking at my dealing range levels, okay? I know we're at the 50%. We've we've pushed up, and let me just look at the 4-hour high here. Um, yes, we broke the all-time highs here. Okay, and anytime you break structure um, on a higher time frame chart, you are going to have a pullback. It may take a while for that pullback to happen. We could have kept going up before we had our major pullback, but it just so happens that the 4-hour chart showed us our pullback is probably starting right here with the bearish engulfing candle, right? So again, we'll move back to the 15-minute chart. So my fair value gaps on the 15-minute chart are the ones that I'm really looking for. But what I'm really looking for are the fair value gaps at the DRT levels. Okay. So this one right here is the highest importance to me. Okay. Um, but knowing that we just broke all-time highs and now we have our pullback, I am actually looking for price to go down and sweep at least this low on the 4 hour. So breaking through the dealing range to the low side for a pullback. But inside of that, we have to find a trade that we can take uh, in today's price action, correct? So that's what we need to be looking for. Now, I don't trade a 15-minute chart, but my 15-minute levels, ICT levels, are what I use to trade to find my lower time frame trades. Okay, so I trade a 2-minute chart. So let's just go take a look, excuse me, at the 2-minute chart and see what happened. Okay, um, we made a fair value gap up right at the open. Okay, and we pushed up. That's when we pushed up to the midline of this fair value gap. We pulled back down and we consolidated a bit. We tried one more time to go back up to that midline and couldn't quite reach it. And then we started to fall off. Okay. So what did this create here? Well, this created the inverted fair value gap right here. Okay. And the inverted fair value gap is should hold if we are going to stay bearish. Now, I came into today with a bearish mindset because we had just broken all-time highs on the YM, and that is the first time the YM has broken all-time highs. NQ and ES have been breaking the all-time high several times over the last few days or week. I haven't been watching those charts, so I don't know how many times it broke it or what time period, we've been breaking all-time highs. Um, I just know that we have been because I watch the news. Okay. Um, so with a bearish mindset, now I want you to take a quick look as to where was that inverted fair value gap created? Right at the 50% level. Okay. We came back up from breaking below equilibrium into discount pricing, and then we shot up back into premium pricing and immediately rejected off of this 15-minute fair value gap to then create an inverted fair value gap directly at the 50% level. Um, the midline of that fair value gap is almost sitting directly on top of the 50% level. So having a bearish mindset, this is the perfect spot for me to take a trade. Okay, because I'm looking for us to go down to the 75 DRT. Okay? And then maybe if we're not going to break that 4 hour low all the way down here at the start of the dealing range, then somewhere in this extreme discount pricing, we should bounce and go back up and shoot for all-time highs again. Okay? So this is where I wanted to trade. Okay. And we got this candle at 10:22 in the morning that pushed, and it was a very fast push up and a very fast rejection right back down into range. Okay. And I got into this candle down around here. It moved fast enough to where I actually could not enter the trade at the 50% level when it hit it. So we got into a short right here. Okay. And this took a while to start working, but I have faith in the system. And even if it didn't hold and I took a loss, I would be okay with that. So my initial stop was going to be above this candle's high because that is the one that was the strong push up that got rejected really fast, really hard off of the level I was looking for. Okay. So I don't want price to break through or even um, get to the top of this inverted fair value gap, which it never did. It did get us into a little bit of a drawdown here before we got our power candle all the way back to the bottom of the range, a little bit of consolidation, and then down we went. Okay. Let me show you what this looks like on my trading chart, okay, this morning. Because not only did we have uh, in um, the afternoon from yesterday, okay, um, this is a 15-minute order block with the 15-minute fair value gap inside of it. And you can see that this is sitting right at the 25 DRT level, okay? And so we came down yesterday and we touched into this level. I wanted to be trading here, but I don't typically trade the afternoons. I trade the mornings. So I was not on the charts when we hit this level. I certainly would have taken a long from this level. Okay. The thing is, I would have had to close the trade at 4 o'clock or 3:45, whatever, when we got back up to the 200 SMA. Okay. So once that's hit, now what am I thinking when we come into today? Well, I'm still bearish. Okay. I'm still looking to get down to, we never actually touched the 75% DRT level. Okay. Um, it depends on which way you pull the fib. This could be the 75 or the 25, right? Um, so when we shot up this morning and got into this fair value gap, I was looking to trade that. So let's go to the 2-minute chart, which we actually trade, right? Um, we already know what this looked like, or sorry, this is where we traded. So I had that marked up on the 2-minute chart. We pushed up, we got our trade, and then we fell below the 9, the 21, and the 200 SMA here. And we went up, retested the 9 and the 21 again, still in a very narrow state. And then after a little bit more consolidation, we got our power move down, which was 2 2-minute candles to the downside. Now, I was already in the trade, but you could have entered the trade right here, okay? Because that was at what, 597, and I'm looking to get down to 535. So basically a 60-point move, okay? Now, my thought process is we've already touched the midline of this yesterday afternoon, so I want to see this fair value gap rebalanced. Okay, I'm not so much worried about rebalancing the order block, but I at least would try to target down here to 520. Okay, so from 520 to 596 is 76 points. That is a very nice trade. Very nice trade. Okay. Um, Now, because I was in the trade from up here, I'll show you what else gave me confluence, which is my pivot points. Um, and you can see that yesterday's low also lined up with the midline of the fair value gap because yesterday that was where we touched the fair value gap and bounced off. Okay, so this was yesterday's low. So we have yesterday's low, a fair value gap midline, the order block midline, all sitting at the 75 DRT level. So this is the area I was targeting for my trade from up here to go down to hit here. And I front run that a little bit. I think I got out at around 550 or 552, somewhere in that area, on this candle when it finally hit my target. Okay. We did continue further. We rebalanced the fair value gap, and we actually went down and rebalanced the entire order block. Now, we do have a daily pivot point here, which is where we have since spent our time sitting right here. And just below the bottom of the dealing range is another inverted fair value gap, okay, on the 15-minute time frame. Let me just make sure that is inverted and I have the right color on there, right? Yes, it is this bearish fair value gap here. It got inverted, and you can see on the 18th we came into that inverted fair value gap where the 200 was, and we bounced off, consolidated, and then went up and took out all-time highs with our manipulation move down here to take out swing lows and then bounce off the inverted fair value gap again to then head up and take out all-time highs. Okay. Um, but I'm just worried about this DRT range for the moment. So that was my thought process this morning for trading. I was of bearish mind, knowing that we just broke all-time highs. This is the third major asset between the NASDAQ, ES, and uh, the Dow that broke all-time highs. So now that all three have broken all-time highs, I'm looking for that pullback. And we can see that pullback start to happen. And again, yesterday, I wish I had been trading a little bit later in the day, but I had things to do. We actually fair value gap to the downside at the 25 DRT level. And again, you know, this would have been a 4-hour high um, that we were looking at. Um, on a 4-hour chart, you know, 6 o'clock to 10 o'clock would have been the high of this candle. We reached up a little further and started pulling down. Okay. Um, I would have had a pretty good confidence level to trade some of these, um, you know, and as soon as that started pulling down, I would have moved my DRT level to here. So it would have been there. And then I could immediately switch to a 15-minute chart. And I could see from that point, when we got down to the 25 DRT level at 11:15 in the morning, that we fair value gap through that level. Okay. Um, I could have traded short anywhere after this 15-minute candle closed at 11:30 and on a lower time frame and gotten a good trade back down to the 200. Okay. Um, so in essence, the way I use the dealing range, once I set my dealing range and say we've been moving up and I set my dealing range at the end of that 4-hour candle, every 4-hour candle, I look to see if we've broken the high of the dealing range. If we have, I'll move the dealing range until we get this kind of signal, which is what's considered our breakaway gap, right? You do have this 15-minute fair value gap to worry about. So you could have even waited till that fair value gap was inverted and then traded off of uh, this fair value gap here because you went up, you did not break the high of the fair value gap. There's a daily pivot point there. You fair value gapped through the pivot point, which shows strength. It came back up, could not break above the fair value gap, and then closed back below. You could have traded anywhere in this area right here for a good trade back down to uh, the 200. So 721 down to uh, 656. I mean, that's a 70 point move just there, or held through the trade all the way back down to the fair value gap that we were looking to come back to, right, at the 50% or at the 75% level of the dealing range. Okay. So I look for fair value gaps um, or order blocks, mostly fair value gaps, at these DRT levels. And they will tell me who is in control, buyers or sellers. Okay. So from yesterday's open, we saw that sellers actually started gaining control. So we had the manipulation move up in the morning, and then in the mid morning, sellers took control and fair value gapped through a DRT level, through a daily pivot point, through VWAP, and that just showed us the strength we needed to start taking shorts. Okay, after breaking the all-time high. Today, same thing, still looking for a little bit more of that pullback, and we were able to take that information on a 2-minute chart and get our trade from here. Okay, um, we did hit full profit on that trade, and we won. Um, it's for me, it's not about the amount of money, as long as the process is being followed. That's what's important to me. But the money is why we're here. So that trade for me was a $956, gave me a $956 win on the day. Now, I did take a loss. Um, no, I took a loss on the Tradeify account because this push up from a narrow state, I took a long here and just didn't close it fast enough. I should have taken a couple contracts off at this midline, moved my stop to break even, and I would have been okay. Would have locked in a couple $100 there. But I wasn't fast enough, paying attention to some other things, some technical difficulties um, that I was having that were my own fault. Uh, Nothing with the platforms or indicators or anything else that I use. So, and everyone in the Discord saw that. So I didn't close that trade soon enough um, to lock in some profit. But then once we pushed down and got this power move back down below the 200, and we just started consolidating on the 2 minutes. This right here, you know, we buyers tried to show strength and immediately got rejected by the sellers. That told me that this move down was probably as powerful as it looked, and we went into that inverted fair value gap, and I wanted to go short and took it back down to the midline of this fair value gap order block and previous day's low and DRT low. So I'm still of the mind that I think we are going to go down and swipe the low of this DRT level. This fair value gap might hold. If not, we have a couple of pivot points down here and coming down here for uh, the pullback and then bouncing up to go take out all-time highs again. Now that all is all dependent. We don't have to swipe this low. It is all dependent on the economic news we have coming out for the rest of the week. Um, so we do have some numbers. I think GDP or unemployment claims. We've got a few numbers coming out tomorrow. Yeah, GDP quarter over quarter numbers are coming out. Those will be the final numbers for that. And unemployment claims Thursday morning. So that should cause some volatility. And then we have core PCE price index on Friday at 8:30 in the morning. That also should cause a little bit of volatility. Now, if these numbers both come out good for the market, then we absolutely could um, start moving up from this discount pricing area back up to take out all-time highs. So we'll just have to be watching for that and be cautious around the news times and just kind of let the news settle and see what the market wants to do with it. But that is dealing range. It's a manipulation move that takes out either a swing low or swing high and then immediately reverses and goes to take out the opposite swing high or swing low. And then you continue moving your dealing range until you get that breakaway gap uh, on the reversal or pullback in this case um, on the higher time frame at the first DRT level, which will either be your 25 or 75, depending on which way you pull the Fibonacci from. Okay. To me, it doesn't matter if you pull it from, you know, the manipulation move to the high of the continuation move, or if you pull it from the top of the continuation move to the manipulation move. To do that, though, you know, you, you're we basically want to start at the manipulation move. It's just the logical place to start your DRT range. Um, and then and that is on the 4 hour, and then move down to your 15-minute time chart and watch what price does at those DRT levels. A lot of times, I mean, maybe you don't see the fair value gap uh, at at the 25 DRT level um, up here, right? So maybe you just let me see, pull that off. Okay. Maybe you don't see a fair value gap here. That doesn't make one. Well, then I'm not considering that to be, the, the start of a pullback. I want to see a fair value gap or an inverted fair value gap at this level to say we are going to go lower. Okay. After having pulled my DRT level to the top of this 4 hour candle. All right. So, but seeing that fair value gap being made gave me confidence that we are now starting our pullback because we could just break below the 25 if no fair value gap is made and then push up and continue higher, having to pull our levels, DRT range even further. Okay. Um, but that gave me the confidence I needed to start looking for shorts. Now we just have to see what price is going to do at these levels. Does it hold at the rebalance of this? Does it never come back and retest this inverted gap? We'll just have to see what happens when we get to this inverted gap. What was the news? Was it good or bad news for the last 2 days of the week? We may pull back even further um, and have to set a new DRT level to the downside because we did break a 4 hour swing high because we made all-time highs here. And if we break and close below this level, and it's not just a sweep into this that holds and pushes back up, then we may need to start pulling the bottom side of this down until we come back up and fair value gap through the 75 level to give us confidence that we are now moving back up through there. But I still will have to be paying attention to the DRT levels and any fair value gaps that we have to the upside so that when we get there, do we invert that gap or does it reject off the midline and we're going to go back to another level? So here's how it works. We want to go from premium to discount pricing to premium pricing to discount pricing to back and forth and back and forth. That's how the markets move. So what we could have and what we could watch for is, we have hit. Okay, here's the difference in my and I'll show you this. And this is why I do it. I told you I had quad, and then I had just had quads. Well, if I click on quads, what this has done is it turns the larger time frame, the larger levels, so from the 1 to the 25%, and it divides that into quadrants as well. Okay, so you can see the 50% of this bottom quadrant is where all of our consolidation is happening. Okay, but we did dip down into discount pricing within this bottom quadrant of our higher time frame DRT level. So what you have is from 25% to 1% is extreme discount pricing, right? From the high. It's in the very bottom quadrant. Well, it doesn't seem to be wanting to break below 50% of that quadrant. We could, on good news, bounce and go back up. Okay. So you can get as technical and as tight as you want to with this system, and you will see that these levels matter. Let me do away with that, okay? Because that's my pivot points. Um, and you will see that on September 23rd at 10 o'clock in the morning, when we pushed our DRT level up to the top of that 4-hour candle, you can see where all these levels are, okay? Now here, the blue lines are my major 25% levels. The green lines are the 25% levels within that 25% level, and the red line is 50% of that 25% quadrant, top 25% quadrant, right? But all these lines were drawn just as soon as I pulled this up here. It wasn't on the way back down that these lines were drawn. It was from the high that these lines were drawn. So you can see what price action does when it comes back down, right? It comes back down to the 25% level, bounces up, goes into premium pricing of this quadrant, and then falls off and gets below the 25% level. Okay, we get down to uh, all the way down to the 50%. We hit discount pricing and it bounces up and hits the midline of the 25 to 50% quadrant. Okay, and then falls off again and gets down to the 75 quadrant and then bounces in the overnight. Where do we come back to? When we get back into premium pricing and we just about get to the 50% of this quadrant again, where we got to here, and we make relative equal highs, and we fall off, and we fall off all the way down to the middle of the bottom quadrant of the higher time frame DRT level. Now we could bounce back up and get back into this quadrant again, maybe get up to this fair value gap, and then fall off again and go break the lows. Or this could be the point where we stop and we end up reversing on good news. Okay. And for me to see that and to expect that to happen, I would need to see a 15-minute fair value gap back through this 75 DRT level right here. And if we get that, and especially if we come back and retest it and it holds, then I can start looking again for my major DRT levels um, to come into play. Okay. So sometimes I will turn this on just to see, you know, how things are happening. Um, and it looks pretty cumbersome on the 15-minute chart, but once you move to the 2-minute chart, you can see we have a little bit more spacing between these levels, and you can watch them pretty nicely. Or again, like I said, we can just go back to the quad and just have the major 25% levels on the chart, which is the way I like to look at it. But I do like to see, you know, sometimes the 25% and the 50% levels inside of the 4-hour quadrants. Okay, so that's what it is. That's how I use it. Um, and I just went into Lux Algo um, indicators because I am a lifetime member of Lux Algo. Um, I paid a one-time fee a couple of years ago, and I get every indicator they've ever created. But now that we're using Ninja, um, they have many, many ICT indicators for NinjaTrader. And this is going to get very interesting because uh, a couple of updates that are coming out on Gamma X are going to really help align with my actual trading style. Um, and so I'm about to be setting up my NinjaTrader charts with my ICT levels. Um, and you will get to see that in action. And I'm super excited uh, to show you what uh, Generator X and Auto XBot can do with ICT levels. Okay, so I hope this video was informative for anyone that may have been wondering why or what was a DRT level, because that's what I referred to them as this morning in the live stream. And I know there were a couple of new people in there um, and people that have come over from JAT's community. Um, you know, don't know how much you've ever worked with ICT concepts. It is mainly what I trade. Um, I do use the SMA strategy as well. So, but ICT levels are where I really, really like to trade. Um, I just haven't, for whatever reason, looked to see because I've been using Luxalgo and ICT levels for so long on TradingView. I just didn't bother to check and see what we had as far as ninja scripts um, to show these levels on my NinjaTrader charts. So I'm going to be building those out this afternoon and this evening, and you will see them in tomorrow's live. Um, I'll still be keeping the Riptide indicators from Gamma X on my charts because that is what's printing my signals for Auto XBot to take the trades. Um, unless we get what's coming uh, out tonight, and I can get them implemented into the generator to produce the signals that I want them to produce with the ICT levels, then we may see Riptide go away for me. I like the Riptide indicators, but it's not exactly, you know, my trading style. It does use the SMA strategy, can trade the SMA strategy that I trade very well. Um, so there will be charts that are just set up for SMAs, and there will be charts that are set up specifically for ICT levels so that I can turn the bot on and off um, when I see fit on either strategy. Okay, so this is going to get super exciting here over the next week or two, being able to trade both strategies in Gamma X with their indicators, their generator that produces the signals for Auto XBot to trade those signals, which takes all of the emotion out of the trading process. Once it enters a trade, I don't have to sit there and ask myself, do I need to get out of the trade? Do I stay in the trade? Do I add to the trade? Whatever. I don't need to make any more decisions. Once I see my levels get hit and the indicator prints a signal, that is my setup. The Auto XBot will take the trade and it will win or it will lose, and I am hands off at that point. I love that idea because most of the losses that we take as retail traders, especially early in our careers, is simply based off emotions. If we can get those emotions out of our trading, we know our strategy. Every strategy works. Your strategy should have an edge that you have tested, back tested in the market. And if your strategy can be traded through Generator X, which it can be, just about every strategy can be, and you can just turn that button on when you get close to one of your setups, um, or get your setup, and you turn that bot on and let it produce the signal, and let it take the trade, and let it take care of the risk management through stop losses, trailing stops, target profits, all of that, and you just go hands off. Your emotions stay out of the trade, and you will have much better results. I and damn near guarantee that. Okay, so all right, I'm going to cut this off here. We have been on for a little while here, and I don't want to make this too awfully long and go off on a rant. So Yeah, that's almost 50 minutes. So if you made it to the end of this video, I certainly appreciate it. If you were interested in what dealing ranges were, maybe this has given you a little bit of insight to something that you might want to trade, or at least start to learn about so that you can add some confluences to your own trading. Um, any questions at all, please uh, shoot them into the comments in YouTube. I'll answer them. Or if you are in the Gamma X Discord, then by all means, ping me or shoot me a DM, and I'll be more than happy to answer any questions that you may have. Until then, we'll see everyone Thursday morning for some trading. Have a good night.